Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Content. Please like, share, and subscribe for more exclusive The Ultimate Guide to Dividend Growth Stocks for Long-Term Investors. Dividend growth stocks are a favorite for investors who want steady income and long-term portfolio growth. These stocks not only pay dividends but increase them consistently over time, creating a powerful compounding effect. For many, they offer a way to build wealth with less risk compared to high-growth, non-dividend paying stocks. Whether you're looking to supplement your income or grow your investments steadily, understanding dividend growth stocks can be a key piece of your financial strategy. What are dividend growth stocks? Dividend growth stocks are a cornerstone of wealth building for many investors. These are shares in companies that not only pay regular dividends but also increase those payouts consistently over time. They can provide a balance of income and growth that appeals to those planning for the long term. Let's break down their characteristics and how they differ from other dividend-paying stocks. Definition and features. A dividend growth stock is simply a stock from a company with a track record of regularly increasing its dividend payments. Unlike stocks that offer high dividends now but might not grow payouts over time, dividend growth stocks focus on consistency and sustainability. Here are a few key features that define dividend growth stocks. Reliable history of dividend increases. These companies prioritize rewarding shareholders with steady increases, often raising dividends annually for decades. Strong financial foundation. Companies able to grow their dividends consistently usually have robust revenue streams, manageable debt levels, and predictable cash flow. Focused on stability over flashy growth. Many dividend growth stocks are found in stable industries like consumer goods, healthcare, or utilities. While their share prices might not skyrocket, they steadily rise along with the increasing dividends. A classic example is the Coca-Cola Company, KO. Coca-Cola has paid and raised dividends for over 60 consecutive years, earning its place among an elite group known as Dividend Kings. These companies have raised dividends for 50 or more consecutive years, a testament to their stability. Differences from other dividend stocks. Not all dividend stocks are created equal. While dividend growth stocks might seem similar to high-yield dividend stocks at first glance, there are some important differences. Let's explore them. High-yield dividend stocks versus dividend growth stocks. High-yield dividend stocks typically offer large payouts relative to their share prices. While this sounds appealing for income-focused investors, these dividends are not always sustainable. Here's how they differ. Dividend growth focus. Dividend growth stocks prioritize increasing payouts year over year, even if the starting yields aren't huge. High-yield stocks offer high initial payouts but may not grow dividends or could even reduce them under financial pressure. Risk and stability. Dividend growth stocks, typically from steady, well-established businesses with low volatility. High-yield stocks, often found in industries like real estate investment trusts, REITs, or energy, where earnings can be more cyclical and less predictable. Long-term versus short-term benefits. Dividend growth stocks, they appeal to investors who want income that keeps pace with inflation and grows over time. High-yield stocks, better suited for those seeking immediate cash flow, but these payouts might not last. To illustrate the contrast, consider Procter & Gamble, PG, a classic dividend growth stock with decades of consistent dividend increases. Compare this to an oil company with a current high yield, but whose payout might fluctuate dramatically based on commodity prices. By understanding these distinctions, you'll be better equipped to choose stocks that align with your financial goals. Whether you're looking for consistent, growing income or a high payout today, recognizing the differences will help steer your portfolio in the right direction. Why invest in dividend growth stocks? Dividend growth stocks have consistently proven to be a smart choice for both beginner and experienced investors. They offer more than just dividends. they provide a pathway to stability, wealth creation, and protection against inflation. But why exactly are they so appealing? Let's explore. Stability and predictability. Dividend growth stocks shine when it comes to stability. In times of market turbulence, the steady payouts from these stocks can feel like a financial anchor. Companies that consistently grow their dividends tend to operate in well-established industries with reliable cash flows. Think consumer staples, utilities, or healthcare. These aren't businesses chasing rapid expansion, they focus on maintaining and growing profits responsibly. Why does this matter? Because even when stock prices fluctuate, the companies keep paying and increasing dividends, providing a sense of predictability. For investors, receiving regular payouts regardless of market conditions can reduce emotional stress and add confidence. A business with a long history of growing dividends signals that it values shareholders and has the financial strength to weather downturns. If you're someone who feels uneasy during market dips, dividend growth stocks can help smooth out the ride. They might not offer the flashy returns of high-growth stocks, but they make up for it with reliable income and long-term appreciation. Compounding effect over time. Reinvesting dividends is one of the simplest yet most powerful strategies for building wealth. When you use your dividend payouts to buy additional shares of the same stock, those new shares generate even more dividends. Over time, this creates a snowball effect, where your money starts working harder without any extra effort on your part. Think of it like planting a tree. The dividends you earn are the seeds that grow into more trees, which then produce even more seeds. The longer you commit to this cycle, the bigger your forest or portfolio becomes. Here's a quick example. Let's say you own shares in a dividend growth stock that yields 3% annually. If the company raises its dividend by 5% every year, and you reinvest those payouts, your effective yield grows, not just because of the increasing dividends but because you're also adding more shares through reinvestment. Over a few decades, the compounding effect could turn modest returns into significant wealth. The key here is patience. The benefits of compounding don't happen overnight, but for long-term investors, they're hard to ignore. By reinvesting dividends consistently, you're turning what might seem like small payouts today into a crucial part of your financial future. Hedge against inflation. Inflation is like a hidden tax on your money, quietly eroding its purchasing power. Over time, the cost of living rises, and what $100 buys today might only buy $80 in 20 years. This is where dividend growth stocks come in. They help protect your income from losing value. Unlike fixed income investments like bonds, dividend growth stocks offer increasing payouts year after year. Many companies in this category grow their dividends faster than inflation, meaning your income keeps pace with or even outpaces rising costs. For example, a company that raises its dividend by 6% annually is outstripping inflation rates averaging 2 to 3%. This growing income stream becomes especially important for retirees who rely on dividends to cover living expenses. No one wants to see their financial comfort shrink over time. By investing in dividend growth stocks, you create a built-in inflation hedge that other asset classes often lack. Beyond immediate payouts, these stocks also provide long-term value. Since businesses capable of growing dividends tend to grow earnings too, their stock prices often rise alongside their payouts. This dual benefit of income plus capital appreciation makes dividend growth stocks a standout choice for preserving and growing wealth. Stay tuned and continue to watch Part 2 to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.